This video is going to look at plant and machinery, which only ever appears on in manufacturing accounts. Okay, so plant and machinery. So adjustments look at the sale and depreciation of plant and machinery of a manufacturing firm. So you don't see this in company and sole trader final accounts. So instead of a delivery vans adjustment, you're going to see an adjustment on plant and machinery. So you're going to have to correctly record the sale and depreciation of plant and machinery in the accounts. And maybe they did something by mistake and you might have to unwind that as well. So this is how it's going to look. So you've got your manufacturing account layout, and maybe you will have depreciation on plant and machinery for the year will be in factory overheads. The loss on sale of plant and machinery would also be in factory overheads, but if they made a profit, you would take it away here. So you would less profit on sale of plant and machinery beside less sale of scrap materials, because obviously that would reduce the overall cost of manufacture. You have cost of plant and machinery at the end of the year, and then accumulated depreciation of plant and machinery at the end of the year as well. And as I said, you might have to correct a mistake that the bookkeeper has previously made. So for example, sometimes the proceeds from the sale of plant and machinery is treated as something else by mistake. So you'll see in the past exams we're going to look at now that they made a mistake. They've treated the check or the amount that they received from it as sale of scrap materials or sales or purchase of raw materials, whatever. So you're going to have to fix that as well. So we'll get straight into it and start looking at the past adjustments. So 2021, question 1B. So it was adjustment number 2. Included in the figure for sale of scrap materials is €11,000 received from the sale of an old machine in 2020. This machine had cost $24,000 in 2014. The cost of plant and machinery is to be written off on a straight line basis over 10 years, at the end of which plant and machinery will have a scrap value of 5% of the original cost. The policy is to apply a full year's depreciation in the year of acquisition and none in the year of disposal. Okay, so this is an unusual one. It was like the 2019 company account, and not a lot of people knew how to treat this. So here they didn't actually tell us what the depreciation rate for year is. So you have to take this information and try and figure that out yourselves. Okay, so we look at this couple of sentences here. Cost of plant and machinery is to be written off 10 years. Okay, and then they're going to have a scrap value of 5%. So if the cost is 100 when it's bought, and the scrap value is going to be 5, as I told you then, that means it must have been depreciated by 95% over 5 years. And when we divide that by 10 years, we'll get 9.5% per year. And this is the struggle that people have, finding this figure here. But you just need to remember it is cost minus depreciation for 5 years is equal to scrap value 5%. And basically that is how you get the depreciation rate per year. Okay, so first of all, we'll fix the sale of scrap materials, because the sale of plant and machinery is not the same thing as sale of scrap materials. So if you imagine a factory that produces jumpers or something like that, the scrap material is going to be all the offcuts of the material, the cotton or whatever it might be from the jumpers. That is not the same thing as selling plant and machinery, selling a big machine. Okay, so we have to fix that, and we'll just fix that by taking the 11,000 out of there. Now, next we'll do the profit or loss and sale of machinery. Okay, so we know we sold machines. So the cost was 24,000. So it had cost 24,000 in 2014. Now we have to work out the accumulated depreciation. We worked out that the rate of depreciation was 9.5%, but we have to figure out how long we're going to depreciate it for. So if we take a look at this sentence here, the last sentence, it says the policy is to apply a full year's depreciation in the year of acquisition and none in the year of disposal. So I'll say that again. The policy is to apply a full year's depreciation in the year of acquisition and none in the year of disposal. So how is that going to look? So we're going to say to ourselves, will we depreciate in 2014? Yes, we will. That was the year of acquisition, and it's going to be a full year's depreciation. Will we depreciate in 2015? Yes, we will. 2016? Yes. 2017? Yes. 2018? Yes. 2019? Yes. But will we depreciate it in 2020 when they disposed of it? No, we won't, because it says the policy is to apply a full year's depreciation in the year of acquisition and none in the year of disposal. So that means then that we have to do a total of 6 years. So 24,000 by 9.5% by 6 years is 13,680 accumulated depreciation there. So the net book value at the time of sale was 10,320 and we got 11,000 for it. So that's kind of good news there. So we have a profit of €680, which we will put down here beside the sale of scrap materials. So less profit on sale of plant and machinery. So our figures there are 24,000 minus our 13,680 minus the 11 proceeds. So that is €680 profit that we will take away there. Next, we will minus the cost of the sold machine from the cost of machines there, so minus 24, so we've got 836. Then we will do depreciation for the year. Okay, so we got a figure here of 79,420. How do I get that? Well, I take my 836, which is my cost at the end of the year, and multiply it by 9.5% depreciation rate per year. Why did I use 836? Okay, so the policy is to apply a full year's depreciation in the year of acquisition and none in the year of disposal. So I'm not going to depreciate that 24,000 at all this year, so it's going to be the 836 there. When I've worked out my depreciation rate for the year, I can add it up to the accumulated depreciation up here. But when I sold a machine, I'll also take that 13,680 away. So when I've sold a machine, you know, you're always going to have 3 figures here. So overall, my figures are going to be 836,000 under the cost. In the accumulated depreciation, I'll have 723,740, and in the net book value, I will have 112,260. And that is the 2021 question 1B done for plant and machinery there. So moving on then to 2018. So same type of adjustment, but it just came up under 2 different adjustments here. So note 7, included in the figure for sale of scrap materials is €3,000 received from a sale of an old machine on the 30th of the 6th, 2017. This machine had cost 20,000 on the 1st of the 4th, 2011. Note 8. Plant and machinery at the annual rate of 10% of cost from the date of purchase to the date of sale need to be depreciated for there. So again, we will fix the sale of scrap materials first of all. So as you know, it's not the same as sale of plant and machinery, so we take that out there. Then we'll work out, did we make a profit or loss on the sale of the machinery. So the cost of the old machine was €20,000. We'll take away the accumulated depreciation. So we have to work out how long they had it. So how long has it been since the 1st of the 4th, 2011 until the 30th of the 6th, 2017. So let's have a look. So in 2011, we had the machine for 9 months. 2012, we had it for 12. 2013, we had it for 12. 2014, we had it for 12. 2015, we had it for 12. 2016, we had it for 12. 2017, we had it for 6 months. So altogether there, that is 75 months. So how much is that then accumulated depreciation? So 20,000 multiplied by 10% multiplied by 62.25 years, or 75 over 12, and we get 12,500 is the accumulated depreciation there. We then get our net book value, which is €7,500. We'll compare that to the proceeds that we got here, which was 3,000, and that gives us a loss on the sale of machine, 4,500. Where am I going to put that? I'm going to put that into factory overhead. So loss on sale of plant and machinery, 4,500 there. Okay, then my cost of plant and machinery, I'm going to take 20,000 away from the overall cost there. So my cost at the end of the year, 400,000. Then I will work out the depreciation on plant and machinery for the year, and I got 41,000. Now, it says plant and machinery at the annual rate of 10% of cost from the date of purchase to the date of sale. So for the first 6 months of the year, we had 420,000 worth of plant and machinery. We multiply that by our depreciation rate and by half the year, that's 21,000. And then after we sold the machine, our new cost was 400,000. By 10% by 6 over 12 is 20,000. So altogether there, that is 41,000 euro there under factory overheads. And then the last thing we have to do is finish the accumulated depreciation. So we add the depreciation for the year, 41,000, and we take away the depreciation on the sold machine. So we no longer have the sold machine, we have to take away the depreciation. So altogether then we've got 400,000 cost, we've got 193,500 in the accumulated depreciation, and we've got a net book value of 206,500. And that is it for the 2018 plant and machinery adjustments. Then looking at the 2016 one, again it came up under 2 different adjustments out of your 9 adjustments, but it's still just the one adjustment really. So number 2, including the figure for sale of scrap materials, is 3,600 received from the sale of an old machine on the 30th of the 6th 2015. This machine had cost 18,000 on the 1st of the 4th 2010. And then note 3, provide for depreciation on plant and machinery at the annual rate of 10% of cost from the date of purchase to the date of sale. Okay, so we'll fix the scrap materials again. As you know, sale of scrap material is not the same thing as sale of plant and machinery. So from the sale of scrap materials here, we will minus 3,600 there. Now, we'll work out then, from the sale of the old machine, did we make a profit or did we make a loss? So the old machine had cost 18,000. Now the rate of depreciation is 10%, but we need to figure out how long did they have it for. So they bought it in 2010 at some stage and sold it in 2015 at some stage. So 2010 they had it for 9 months, 2011 12 months, 2012 12 months, 2013 12 months, 2014 12 months, and then 2015 they had it for 6 months. So altogether there, that is 63 months. So to find how much depreciation had been charged on that, it's 18,000 by 10% by 63 over 12 months, which is 9,450 euro accumulated depreciation. If I take that away from the cost, that gives me a net book value of 8,550. If I compare that then to the proceeds of 3,600, I figure out, unfortunately, made a big loss there, 4,950, which we put in the factory overheads here, 4,950, and I've got my 3 figures, 18,000 minus 9,450 minus 3,600. Then we will do the fix the cost here. So we're going to take away the cost of the machinery that we sold from the overall cost. So we've got 302,000 here in the cost. Then we'll work out the depreciation for the year, and we worked it out to be 31,100. So how do we do that? Well, it's provide for depreciation, annual rate 10% cost from the date of purchase to the date of sale. Okay, so for the first 6 months of the year, we had 320,000 euro worth of depreciate of plant and machinery. So 320 by 10% by 6 over 12 is 16,000 euro. Then after we sold the 18,000 worth of machinery, the cost was 302,000 by 10% by 6 over 12 is 15,100. Altogether 31,100. I'll add that 31,100 to my accumulated depreciation, and I will take away the accumulated depreciation from the sold machine. So when I sell a fixed asset, I minus the cost from the cost, and I minus the accumulated depreciation on it from the accumulated depreciation. So overall, I've got 302,000 euro, 96,650 euro, and 205,350 euro. And that is the 2016 plant and machinery adjustments complete there. Then 2013 Marjam Limited, so only one adjustment here, but all the same things you're being asked to do. So number 3, provide for depreciation on plant and machinery at the annual rate of 10% of cost from the date of purchase to the date of sale. Note, on the 31st of the 3rd, 2012, machinery which had cost 20,000 on the 30th of the 6th, 2006 was traded in against a new machine which cost 51,000. An allowance of 8,000 was given on the old machine. The cheque for the net amount of this transaction was incorrectly treated as a purchase of raw materials. This was the only entry made in the books in respect of this transaction. Okay, so here, instead of treating the cheque as sale of scrap materials, which we've seen there recently, it's now being treated as the purchase of raw materials by mistake. So we're going to fix the purchase of raw materials by taking the cheque for the net amount away, and it's €43,000. Where did I get that €43,000? Well, it's the cost of the new machine minus the allowance that the business got for it. So 51 minus 8 is 43,000. Then we'll do the profit or loss and sale of machinery. So the cost of the machine that was sold was 20,000. Then we'll take away the accumulated depreciation. The rate is 10%, but we need to figure out how long did we have it for. So we bought it, the business bought it on the 30th of the 6th, 2006, and they sold it on the 31st of the 3rd, 2012. So for 2006, they had it for 6 months, 2007, 12 months, 2008, 12 months, 2009, 12 months, 2010, 12 months, 2011, 12 months, and then 2012, when they sold it, they had it for 3 months. Altogether, that is 69 months. So 20,000 by 10% by 69 over 12 months, that is €11,500 there. If we compare that then to the net book value, if we take that away from the cost, we'll get the net book value. So we'll compare the net book value, this is how much it was worth at the time of sale, to how much we got for it, which was 8,000. Again, unfortunately, they made €500 loss, which we will record up in factory overhead. So loss on sale of machine, this is the cost, minus the accumulated depreciation compared to the proceeds, €500. So then we will adjust the cost. So we'll minus the 20,000, which is the old, and then we will add the 51,000, which is the new. So the new cost of plant and machinery at the end of the year, this happened during the year though, it was €301,000. Now we can work out the depreciation for years. So the depreciation is worked out annual rate of 10% of cost from the date of purchase to the date of sale. So we had, at the start of the year, we had 270,000 worth of plant and machinery. Multiply that by 10% and multiply that then for the first 3 months of the year is 6,750. Then after we sold the old and got the new, our cost was 301,000 by 10% by 9 over 12 months, that's 22,575. So the depreciation on plant and machinery is €29,325 there, which we will add up here, and then we will take away the depreciation on the sold machine. So altogether we've got a cost of 301,000. We've got accumulated depreciation. When we tot all this up, we get minus 107,825, and that gives us a net book value of 193,175. So that is 2013 Marjam Limited plant and machinery adjustment complete there then. Next, we're moving on to Fisher 2011. Again, here you can see that the plant and machinery depreciation and sale adjustment is split up into two here. So number 3, first of all, included in the figure for sales is €4,000 received for the sale of old machinery. This machinery had cost €24,000 on the 1st of the 10th, 2005, and was sold on the 30th of the 6th, 2010. The cheque had been entered in the bank account. This was the only entry made in the books. Okay, then note 8, depreciation is provided on fixed assets as follows: plant and machinery at 20% of cost per annum from date of purchase to date of sale. Okay, so the first thing that we'll do then is we will fix the figure for sale. So they put the proceeds from the sale of plant machinery into sales, which, as you know, is completely wrong. So from the trial balance figure of sales, we'll take the 4,000 away there. Then we'll do is we'll work out the profit or loss and sale of machinery. So the machinery had cost 24,000. Then we'll take away the accumulated depreciation from that machinery. So we need to work out how long did they have it for. So they bought it on the 1st of the 10th, 2005, and they sold it on the 30th of the 6th, 2010. So for 2005, they had it for 3 months, 2006, 12 months, 2007, 12 months, 2008, 12 months, 2009 12 months, and then 2010 they had it for 6 months. So when we tot all of this up, it's going to be 57 months. So this is how we'll calculate the accumulated depreciation then. So 24,000 by 20%, because that's the rate of depreciation there, by 57 over 12 months, and that is €22,800 there. So the net book value of that plant and machinery at the time of sale was €1,200. If we compare it to the proceeds that we got, which was 4,000 there, that means we made a profit of 2,800 profit, which we will put here under sale of scrap materials. So we will take away, so also less profit on sale of plant machinery, 24,000 minus 22,800 minus 4 is 2,800. So then what we'll do is we'll adjust the cost up in the balance sheet. So the balance sheet, we've sold that plant and machinery, so we'll minus that 24 there, so 216. We'll minus the accumulated depreciation in a second, but we'll do the depreciation for the year first. So depreciation in plant and machinery, so it is depreciated at 20% of cost per annum from date of purchase to date of sale. So for the first 6 months of the year, the cost of the plant and machinery is 240,000 for the first 6 months of the year. So 240,000 by 20% by 6 over 12 is €24,000. And then the cost at the end of the year, because they sold that 24,000, was 216 by 20% by 6 over 12 is 216. So altogether 45,600. So we'll add the 45,600 and we will take away the 22,800 accumulated depreciation on that old machinery. So then we have a cost 216, we'll minus 152,800, and then the net value is 63,200. So that's the 2011 one done. So 2009 then, Blenheim Limited, adjustment number 3 and adjustment number 8. So number 3, included in the figure for the sale of scrap materials is €800 received from the sale of an old machine on the 1st of the 9th 2008. This machine had cost 9,000 on the 1st of the 4th 2005. The cheque had been entered in the bank account. This was the only entry made in the books. And then number 8, depreciation is provided on fixed assets as follows. Plant and machinery at 20% of cost per annum from date of purchase to date of sale. Okay, so let's get started. So sale of scrap material, that was treated incorrectly because the proceeds from the sale of the plant and machinery went in here, and as you know, they're not the same thing. So we'll fix that by taking the 800 out of that. Then we'll work out the profit or loss on sale of machinery. So the machine had cost €9,000 back in 2005, but we need to work out how much depreciation was charged on that to date. So bought it on the 1st of the 4th 2005 and got rid of it on the 1st of the 9th 2008. So 2005 had it for 9 months, 2006 had it for 12 months, 2007 had it for 12 months, 2008 had it for 8 months. So we got it on the 1st of the 9th we sold it. So we didn't have it for the 9th month, so we only had it for 8 months there. In total then, that is 41 months. So 9,000 multiplied by 20% by 41 over 12 months is €6,150. So the net book value then there is €2,850. So if we compare that to the proceeds of €800, we have a loss of €2,050, which we'll put into factory overheads. So loss on sale of plant and machinery, we have 2,050 there. So 9,000 cost minus 6,150 accumulated depreciation minus the proceeds 800, 2,050. Right, so then we will adjust the cost of plant and machinery in the balance sheet. So we've got rid of that plant and machinery, the cost was 9, so we take the 9 away here. So our new cost there is 271. Now that we know our new cost, we can work out what the depreciation charges for the year, because it's to be provided 20% per year of cost per annum from date of purchase to date of sale. So we know that we had the 280,000 for the first 8 months of the year. So for the first 8 months of 2008, they had 280,000, And then for the last 4 months of 2008, they had 271,000 after they got rid of the 9,000 there. So you'll see we get decimals here, but when we add them together, then our figure will be rounded. So it brings it up to €55,400 there. We'll then add that to the accumulated depreciation, and we will take away the accumulated depreciation from the old machine there. So in total then, accumulated depreciation is 179,250. So 271 and then minus 179,250 is 91,750 net book value. Then we have 2005, James Limited. So we have two adjustments here. So again, number 2, included in the figure for sale of scrap materials is 1,800 received from the sale of an old machine on the 30th of the 6th, 2004. This machine had cost €22,000 on the 1st of the 4th, 2000. The cheque had been entered in the bank account. This was the only entry made in the books. And then number 6, depreciation is provided on fixed assets as follows. Plant and machinery, 20% of cost per annum from date of purchase to date of sale. Okay, so we look here, and included in the figure for sale of scrap is 1,800. So the sale of plant and machinery was treated incorrectly there. So we need to minus 1,800 from the sale of scrap materials to fix that error that the bookkeeper had previously done. Then we'll work out whether there was a profit or a loss on sale of machinery. So the cost of the machinery when it was bought was 22,000. We'll take away the accumulated depreciation. So we bought it on the 1st of the 4th, 2000. So we had it for 9 months of 2000. We had it for 12 months 2001, 12 months 2002, 12 months 2003, and then we sold it on the 30th of the 6th, 2004. That was 6 months. So altogether there, 51 months we had it for. So how much does that relate to then for depreciation for this 22,000 machine? So 22,000 by 20% depreciation by 51 over 12 months, and that is €18,700 accumulated depreciation over that old plant and machinery lifetime. That gives us a net book value of €3,300. When we compare that to the proceeds of €1,800, we get a 1,500 loss on sale of machine there. So that's that. Then we will fix the plant and machinery figure. So we sold a van or plant machinery worth 22,000, so we minus 22,000 there, and that gives us a cost €238,000 there. Then we can work out the plant and machinery depreciation for the year. So we had the old van for half of the year. Okay, so for half of the year we had a cost of 260, and then when we sold the 22,000 we had a cost of 238. So 260 by 20% by 6 over 12 is €26,000, and then 238,000 by 20% by 6 over 12 is €23,800. So altogether there, €49,800 depreciation on the plant and machinery there, which we will add up here, 49,800 here, and then we will minus the €18,700 accumulated depreciation on the sold machine. So overall, 238,000 under the cost at the end of the year, 135,100 under the accumulated depreciation, and 102,900 under net book value. So that is that. So then we have, that's the end. So that was the last one. Okay, so that was the 2005 question, and then that is the end then of the plant and machinery adjustments.